The biggest mortgage collapse in US history just got even worse here in September 2025. The demand to buy houses is way down. It's down by 30 or 40%. And so long as this mortgage demand stays down, we're unlikely to see a housing market recovery and we're more likely to see home prices drop. And in this video, I'm going to give you the data on this mortgage collapse and what it means for you as a home buyer or investor in 2025 going into 2026. And so the place I want to start here, everyone, is an article from CNBC. It's talking about how mortgage demand from home buyers just pulled back after 4 weeks of gains. And that 4 weeks of gains actually wasn't even that big. But the mortgage demand is now pulling back at the exact time when mortgage rates are going down. And this is a problem for the housing market. Because if we take a look at the historical mortgage purchase demand in the market, you can see where we're at today on the mortgage application demand is down about 40% from the pre-pandemic norm, and it's down 55% from the pandemic peak. So we've had a massive collapse in mortgage application demand. We've been in this collapse for about 2 years, and in fact, this collapse is even bigger than the depths of what we saw at the end of the last housing downturn in 2008, 2009, 2010. Now, that data measures the amount of people going and applying for a mortgage to buy a house. And over 70% of home purchases need a mortgage to take place. So such low mortgage demand is creating big problems in the market. And I think what's surprising a lot of people now in September is that with mortgage rates dropping and with the Fed going to cut rates in a couple weeks, we're not seeing the bounce back in demand you would expect. And I think this is going to mean we're going to see continuing declining prices in a lot of different states across the US. In fact, we're already seeing prices drop in about half the different states in the US. And we're seeing some of these price drops actually get really big. Like on some listings in Florida, values are down 20, 30, 40% from what they were compared to what the previous people bought them for. I mean, take a look, folks. Take a look at some of these listings that I found in Florida. We have a house here in Venice, Florida, on the West Coast, sold for $399,000 in July 2025. 399,000, 3-bed, 2-bath, 2,600 square foot house, sold for $152 a foot. You could see the previous sale price was $625,000 in May 2022. So this owner lost $225,000 on their purchase. And the most recent purchase is basically back at what pre-pandemic pricing was. So this is showing you just how much the values are actually dropping due to this mortgage collapse in a place like Florida. Here we have another listing. This is a house in Ocala, Florida, that just sold for $219,000 in July 2025. Now you could see $219,000 for a 2-bed, 2-bath that was built a couple years ago. Take a look at what the previous owner bought it for, everyone. The previous owner bought it for $335,000 in February 2023. So this owner lost about 35% from their acquisition 2 years ago. And the reason I'm showing you these listings is to highlight how this housing downturn is getting real in the parts of America where the inventory is piling up. In the parts of America that I've been warning you all about for the last couple of years, there's actually serious declines taking place. And ultimately, that's good news for you as a potential buyer and investor. If we're seeing 20 or 30% declines from what owners bought it for in 2022 and 2023, that means that affordability is happening. We're on the way to affordability. And while prices will continue to drop over the next year in the markets that are most negatively impacted, you actually do have an opportunity now to get into the market and start making offers and potentially buy one of these houses at a below market price. And as this video goes on, I'm going to give you some more of these listings and give you some tips on how you can do that. But first, I want to talk about some recent news from the Trump administration. The Trump administration, they are proposing something really interesting, actually, and they're saying they might do this in the fall, that they might declare what's called a national housing emergency. A national housing emergency. And what that means is that they could declare a state of emergency across the US based on how unaffordable it is to buy houses. And there's some things that they're now potentially suggesting that they could do in response. And I want to walk you through this, everyone, because I think this is a really interesting news story. Again, like in response to this mortgage collapse, I'm sure the Trump administration officials see the demand on mortgage applications. They see the data that I'm telling you about here, and they're starting to react to it. Here's the article from Realtor.com. Trump considers declaring national housing emergency this fall. National housing emergency this fall. The Trump administration is considering emergency measures to address housing affordability that has left millions struggling to pay rent and price out of home ownership, according to Treasury Secretary Scott Bessent. He says, we may declare a national housing emergency in the fall. We're trying to figure out what we can do, and we don't want to step into the business of states, counties, and municipal governments. He declined to give specific actions. However, he said that the administration officials are studying ways to decrease closing costs and to nationally standardize the local patchwork of building and zoning codes. So the first two things that they seem to be considering: one, reduce closing costs. So that means either reducing title fees, maybe reducing realtor fees, maybe even introducing some home buyer tax credit. Some people are suggesting the Trump administration might try to introduce a home buyer tax credit at the end of this year. They haven't said that. Some people are speculating that. Number two, is there a way through declaring a national housing emergency that they can get different cities and states that don't build enough homes to build more homes? Those seem to be the initial two policy levers that people are suggesting the Trump administration might pull. We'll see if they do it. However, I do have a message for the Trump administration, and it's this. If you do want to fix this housing affordability crisis, and I think it's good that you're thinking about fixing it, but if you do want to fix it, it comes down to one thing and one thing only, and that's inventory. How do we get more inventory on the market? Because if we get more inventory on the market, that's going to increase the affordability for home buyers. That's going to cause sellers to have to cut prices. And we're already seeing this play out in different states and cities. And this next graph I'm about to show you actually shows how much inventory matters on the housing market and why you need to understand the inventory situation in your state, city, and zip code. This graph is absolutely crazy. I put this together earlier this week and I shared it on X, and I'm going to share it with you guys here. Now, this graph is comparing two things. It's comparing around the 100 largest metros in America, maybe the 50 largest actually. And we're comparing the inventory surplus or deficit on the x-axis to the home value growth over the last year. And what do you see, folks? We have a really strong relationship between inventory and home value growth. Like, basically, the more inventory there is in a market, the more the prices are going down. The less inventory there is in a market compared to its long-term norm, the more that prices are going up. And so on one extreme, we have Tampa and Austin, where Reventure app shows that we have a 60+% inventory surplus in Tampa and Austin. Well, prices are down 5.6% over the last year. Comparatively, in Hartford, Connecticut, Hartford has a 47% inventory deficit. Values in Hartford are up 4.2% as a result. In Cleveland, there's an inventory deficit, values are up. In New York, there's an inventory deficit, values are up. So what this graph is proving to you all is how much inventory matters on the market, how you need to understand the inventory situation in your market, and how the Trump administration, if they're serious about this national housing emergency, needs to focus on inventory. Get more inventory on the market. That's going to lead to cheaper prices and more home sales. More borrowers will be able to afford it. And I think we're in a really interesting time in the housing market right now, because I think a lot of people now know that we're in a downturn. And to be clear, not everyone knows we're in a downturn. I've been back in Nashville now a week, and I'm talking to a lot of locals in Nashville. And a lot of locals in Nashville here don't know that there's a housing downturn taking place in this city. And it's kind of interesting to me because it reminds me a lot of Florida a year ago. When I moved to Florida a year ago, it was like the situation where it was obvious prices were going to drop, but not a lot of people knew. Now Florida is in a harsh correction. Nashville today, and I think a lot of other cities in the Southeastern America feel like Florida did a year ago, where the writing is on the wall, but not everyone knows about it yet. And if you're a home buyer or investor, or just someone trying to understand the market better, don't get discouraged if you see listings on the market that are still very expensive. Don't get discouraged when you see that because a lot of these sellers selling in a market like Nashville or Atlanta or Dallas or Phoenix or Vegas, a lot of these sellers are still overpricing their homes. And that can be frustrating, but understand a lot of those sellers would actually be willing to sell their houses at a cheaper price. They just don't want to tell you that up front. They just don't want to tell you that up front. They don't want to advertise it. But if you come to some of these sellers with offers at below list price and you're respectful and you write them a nice note and you explain why you're offering below list price and you use the data on Reventure app showing the forecasted declines, it increases your chances of actually getting below market offer accepted and saving tens of thousands of dollars on your home purchase. We've had some users in the last 2 months in Reventure app save $50,000 to $80,000 on their home purchase by using our price forecast and using that as a negotiating tool to actually, grind the seller down a little bit and get them to accept a price below what they're listing for. And later in this video, I'm going to explain to you how you can potentially save tens of thousands of dollars on your home purchase this year by using that data. But overall, just don't get discouraged if certain sellers are still listing high because the market is definitely trending in your direction. And I'm going to get to your requests here in a second, everyone, on your zip codes that you want me to look at and analyze so I can help you all kind of think about how to analyze the housing market. But, I wanted to talk about actually another indicator here that suggests that you as a buyer are going to have more leverage as the year goes on, especially as we head to the fall and winter. In the fall and winter is when prices tend to drop more just on a seasonal basis. So on a seasonal basis, starting like in October, sellers start to get a bit more desperate to cut the price, right? So you're going to see more leverage on a seasonal basis as a buyer over the next 3 or 4 months. But take a look at this, everyone. This is an additional data point. Redfin just reported that home purchases are getting canceled now at a record rate. So 15.3% of home purchases in July 2025 were canceled. 1 in 7 US home purchases fell through. That was the highest rate for July that we've seen going back 8 to 9 years. So pre-pandemic, around 11.6% of home purchases were canceled. Now 15.3% are canceled. And so what that says, everyone, is that, we talked about how the mortgage applications are already really low. Current demand is at the lowest level in 30 years on mortgage applications. But even with that, once people apply for mortgages and get under contract, they're backing out at a record rate. And so this is another signal of how buyers are really, controlling this market in a certain way. It might not feel like it all the time if you're a buyer, but more and more you're controlling this market. You have the leverage. And we could see some of the markets that had the highest cancellation rate, according to data from Redfin, include San Antonio, 23% of contracts were canceled. Fort Lauderdale, 21%. Jacksonville, 20%. Atlanta, 20%. Tampa, 19.5%. Riverside, California, 19.5%. Fort Worth, 18.6%. Orlando, 18.2%. Houston, 18.1%. Vegas 17.9%. So these are the markets largely in the Sun Belt, in the Smile States, that have the highest contract cancellation rate. So think about that. Some of these places in Florida and Texas, 1/5 of contracts are getting abandoned. Why is that happening? I think buyers are getting cold feet. I think buyers maybe get a deal or they go under contract maybe at list price, right? And then they say to themselves, is this a good idea? Additionally, maybe some of them, when the underwriting happens from the mortgage lender, maybe they get rejected too. That could also be happening because the affordability is still really poor on a national basis, right? I mean, the cost to buy a house has never been higher in nominal terms. I mean, it costs around $28.50 a month for your mortgage, taxes, and insurance in the US today. $28.50 a month. Folks, do you know how high that is? Prior to the pandemic, it was like $1,200 a month. So it's more than doubled. Your ongoing cost of ownership of buying a house has more than doubled over the last 5 years. And rest assured, the wages and the incomes have not more than doubled, right? Wages and incomes are up, what, 25, 30%? The cost to buy is up 130%. And this is the principal issue. And again, what the Trump administration should look to fix, right, is this cost of buying a house with a mortgage. The cost of buying a house with a mortgage, we're up to $2,800 a month to buy a house with a mortgage. This is going back to 1955. I'm going to actually just take away my video here for a second so you can see the full graph. Back in 1955, it cost $100 a month to buy a house with a mortgage. And it was pretty cheap actually for like 15 years. And then 1970 was 225 a month. And then it rocketed up to 900 a month by 1981. So you can see this big increase in the cost to buy a house in the 70s and 80s when we had that great inflation, the 18% mortgage rates. Then cost to buy a house with a mortgage stayed pretty stable for about 20 years, around 7 to 900 a month. Then we had housing bubble number one in '06, where it went up to 1,600 a month. Then it crashed down to 900 a month. Now it's up to 2,800 a month. So, one of two things is going to happen here, folks. Either we're going to see this cost to buy a house plateau for a long time, like it did from 1981 to 2003. It basically didn't grow for 20 years. That's one option. It's not going to grow for 20 years and then the income can catch up. The other option is this cost to buy a house is going to have to come down. It's going to have to come down probably to like 2,000 a month, I think. I think if it gets to 2,000 a month, we could see more buyers come in off the sidelines. And to get to 2,000 a month, we need to see prices drop around 15 to 20%. We need to see 5.5% mortgage rates. Actually, I'm sorry. I think it's 5.1% mortgage rates. Prices drop 20%. That would get us to a 2,000 a month monthly payment, and I think that would get more buyers into the market. So if you're a realtor or a mortgage broker out there or an investor, and you're trying to, say to yourself, hey, I don't like this housing market, how like the sales are so low, the mortgage applications are so low. When is the demand going to come back? What needs to happen for the demand to come back? Well, we need to see both prices and mortgage rates go down. I think 15 to 20% decline in prices on a national basis, that brings buyers back. You pair that with mortgage rates going down to 5.1%, that would bring a lot of buyers back into the market. Those should be the two focus points. 20% decline in prices, 5% mortgage rates. We get that. We get buyer demand back. We get a healthy housing market. We get an economic boost. And I think people in the real estate industry should celebrate the idea of this happening. A lot of people in the real estate industry are scared of the notion of prices dropping. They're scared of that. It's like almost kind of taboo in the housing industry to talk about prices dropping, especially if you're a realtor and you work at a realtor agency. I know I have some realtors who watch this channel, and like I talk to some of you guys out there and you're like, wow, the people in my office are insane. Like they keep saying prices are going to go up, but I see the data and it's not happening. The buyers are down. I think, rest assured, more and more people in the market will start understanding your perspective because it's getting harder and harder to ignore what's going on, right? I mean, how can you think that this market is going to have a positive bump when we have this data here on the mortgage application index? I mean, the mortgage application index, folks, it's a 158 in early September. Now that's up 16% from a year ago. Okay, we have a little bump in mortgage applications, but it's down 49% from 2020, 35% from 2019, 31% from 2018. So we're still down 35% on mortgage applications from pre-pandemic levels. This was the data I was showing you before on the chart, on the graph. Now we're looking at it in a table. And we're not going to see a rebound in demand until this mortgage application goes up significantly. And to see that, we're going to have to see both prices and mortgage rates go down. But what I want to do for you now, guys, is take some requests here, because I know a lot of you out there, you're curious about your local housing market, right? Like what's going to happen in your city, in your zip code? Should you buy now? Should you wait? If you do buy now, what should you offer? How much are prices going to drop in the future? Let's dig into that right now by taking some requests here. We're here kind of in the live stream, and my channel members have given me some zip codes here to check out. So David wants me to check out 83644. So let's check out 836. Whoops, sorry guys. David wants me to check out 83644. 83644 zip code. So let's take a look at 83644. We'll go on Reventure app and see. Is this in Arizona? No, it's in Idaho. 83644. All right. So this is where? This is in the Boise metro, but it's out west. This is near Caldwell. And the first thing we can see here in this zip code, prices are down 0.33% in the last month. In the last year, they're up 0.5%. So prices have been kind of stable in this zip code over the last year. The question is, where are they going to go? Well, the reventure home price forecast for this zip code is minus 4.7% over the next 12 months, David. So this is what our data is saying in terms of where we think prices are heading here, northwest of Boise, 4.7% decline. We are in a buyer's market, as you can see. Um, it's not as big a decline as you're seeing in some other markets, like in Florida and parts of Nashville and parts of Texas. We're forecasting 10% declines in certain zip codes, 11% declines. But we are seeing a correction coming here, and the main reason is inventory, right? So if we go and look at the inventory here in 83644, oh, you could see we got a lot of homes on the market for sale. In addition, our days on market, and you guys should definitely check this data when you go on Reventure app and do your research. The days on market's up to 55 days. That's the second highest level, going back 7 to 9 years. Going back, I should actually say 10 years almost. So the way to think about it, right? If you're looking at buying a house, you want to know, are prices going to go up or down in my area? Which I'm sure a lot of you want to know that. You can let me know if you guys want to know. Are prices going to go up or down in my zip code over the next year, and by how much? Inventory, days on market, price cuts. Those metrics tell you in real time what's happening in your market. And what's beautiful about those data points is they cut through a lot of the nonsense you hear. A lot of the narratives spewed by a lot of the locals about, like, all the people from California are moving here. I'm sure in Boise, there are still people saying that. All the people from California are moving in and buying up the homes. Is that true? Well, look at the data for your zip code on Reventure app, and you'll be able to answer that question. You'll be able to know what the data is saying about where prices are heading. All right, let's look at another one here. Another request. 33134. Now, 33134, and sorry, who requested that one? 33134 was from Rick. 33134. So this, I believe, is in Florida. 33134. Coral Gables. Oh, this is going to be a fun one, everyone. Coral Gables. For those of you that don't know, Coral Gables is west of Miami, and this is actually a really nice area west of Miami. University of Miami is actually just to the south of here. This is a market that might still be up year over year. No, it's now down year over year. Okay. This was a market that was holding on for a while, Coral Gables. Not anymore. Values are down 1.5% the last 12 months. So values here in Coral Gables are already correcting, Rick, which is good. However, the prices are really expensive. Typical value is $859,000. The question is, where are prices going over the next year in Coral Gables? Ooh, okay. This might not be what you wanted to see, Rick. You can let me know. But our forecast is actually saying prices are going to be stable here in Coral Gables. And so, I tend to focus a lot on the markets where prices are forecast to drop. But we do have areas in America, even in Florida, even in Miami, where we're forecasting stable prices. And the reason we're forecasting stable prices here in Coral Gables is because inventory, while it's up, is still below the pre-pandemic level. So inventory is still below pre-pandemic. And let's see, days on market. How's days on market? Days on market is actually still also below pre-pandemic. So this is like the flip of the market in Boise. I want you guys to pay attention to this so you can understand how to look at it in your area. We just looked at a market in Boise where DOM and inventory was way up from pre-pandemic levels. Now we're looking at a market in Coral Gables in Miami where inventory and DOM is below pre-pandemic levels. So what that says is the market here in Miami and Coral Gables is going to do better, plus 0.3% forecast in the next 12 months. The market in Boise is going to do worse. That was a minus 4.7. So it really depends. The forecast really depends on your area. However, one additional thing I want to just check here are the home sales in Coral Gables. How many home sales are there? This is probably the one thing you got to watch out for in Coral Gables. If you are someone in Miami, especially wherever you are in Southeast Florida, but especially in Coral Gables, look at this drop in demand. We went from 86 sales to 36 sales in the month of July, according to data from Redfin. That's the lowest buyer demand in 13 years. So while our forecast at Reventure app is forecasting stable prices for Coral Gables, understand the demand is actually really low. If we see more inventory pile up, that forecast could shift negative going forward. Let's look at one more request before I cover some other things here in this video. Okay, how about we take a look at Sandra. So Sandra is a channel member here And you guys can join as a channel member by hitting join below on the YouTube channel if you want to play along in these live streams in the future. She's requesting 30281. 30281. Rick says, thanks. No problem, Rick. 30281. Ooh, Stockbridge, Georgia. I was just here not so long ago. I was near here at least. I was in, where was I? Locust Grove. I was actually in Locust Grove. I filmed a video in Locust Grove about a month ago. Sandra is in Stockbridge. She wants to know about Stockbridge. Well, let's see. Home value growth over the last year in Stockbridge, minus 4.1%. Okay. And oh my gosh, look at some of these zip codes to the west of Stockbridge, everyone. This is south of Atlanta, just so everyone knows. We're south of Atlanta here. This is downtown Atlanta. This is south of Atlanta. We have some zip codes near Stockbridge, near you, Sandra, where values are down 14% year over year. I mean, this is an area that's getting hammered south of Atlanta. Stockbridge, not as bad. But where price is going to go the next year? Well, let's look at the price forecast here on ReVenture Our home price forecast, minus 7.9%. This is the biggest downward forecast we've looked at so far in this live stream, minus 7.9%. Wow. Okay. Why are we forecasting minus 7.9%? Well, you could see, folks, we went from a heavy seller's market to a massive buyer's market. So good news, Sandra. You're in a huge buyer's market south of Atlanta in Stockbridge. You have the leverage. I bet you if you go and make offers, and I can't guarantee this, by the way, but I bet you if you go and make enough offers and you give them educated reasons why you're making offers and you give them the data, I bet you will be able to buy houses at below asking and below list price in this type of market. If you see like a buyer's market score of a 28 out of 100 and a minus 7.9% forecast, it's telling you make offers. Like, make offers and be aggressive. It's not going to necessarily work every time, but folks, we've had people save $80,000, almost $100,000, $50,000 in different cases using this data to make offers on houses. For $49 a month is the ReVenture app subscription, and they save $50,000 as a result. Pretty good ROI. The reason, Sandra, we have this downward forecast in Stockbridge is because of the inventory. The inventory is at a record. We were at 140 homes on the market 2 years ago. Now we're at 280 homes on the market. Not only that, DOM way up. The DOM, and this is loading a little slow right now. The DOM is up to 70 days. Wow, that's a record going back 10 years. And then the price cut rate is at 29%, also a record. So that's a trifecta, everyone. Inventory, DOM, price cut rate, all at the highest level in a decade for your zip code. That's great news if you're a buyer investor. It means cheaper prices are on the way. It means you could probably get cheaper prices now if you go and actively bid on houses and offer below market, below list price. And I want to actually take a second here, everyone, to explain to you actually how this forecast that we have at ReVenture app is doing. We've ran some tests. We've ran some tests on this forecast, and I've talked a lot about it. So I'm sure you guys are probably a bit curious. Just how good is this forecast? And can you trust this forecast? Well, we ran some tests, and we found that we've achieved so far in 2025 a 73% correlation coefficient on our forecast from last year in 2024 going into 2025. I'm going to show you this graph, everyone, because it's something I'm very proud of. I think it's something that's really impressive that what we've done here at ReVenture app. And what you could see here on this page, and anyone can go to this page if you want to read about it, it's reventure.app/forecast, is we plotted what our forecast was in April 2024 for, I think it's like the top 300 metros, 500 metros in the US. And we compared it to the home value growth that then happened over the next year. And you could see a very strong correlation, 73% correlation coefficient. Basically, the higher our forecast was a year ago, the more values went up over the next 12 months. The lower our forecast was 12 years ago, or 12 months ago, the more that values dropped over the next 12 months. And we've also compared the results of our forecast to Zillow's forecast in the same period. Zillow's forecast is here on the left. Our forecast is here on the right. You can see our forecast so far in 2025 is 6 times better, over 6 times better than Zillow's. So I just wanted to show you all that data so you can understand that this is actually a really reliable forecast based on the underlying market dynamics, and that if you use it, you're using objective data that's going to help you secure a house at a discount and also help you spot some of the areas that could have the best long-term growth potential. Because this is another thing I've been thinking about recently, and you guys can let me know if you're interested in this, is like not just where are prices going over the next year. I mean, that's really valuable to know. But where are prices going over the next 10 years? And what cities and neighborhoods are going to have the best 10-year appreciation? And we actually just released a data point on Reventure app where you guys can look at that data. We call it the long-term growth score, and we've ranked almost every zip code in the US based on how we think prices are going to go up over the next decade. And I'm going to preview that long-term growth score for you right now so you can understand how we come up with it and how you can use it to actually find the areas that are going to have the best ROI in the long run. And I'm going to focus here on Nashville. And actually, folks, I'm live from Nashville. This is my new office. I moved in here a couple days ago. You guys can let me know what you think about it. Um, it's I like it. I think it's better than my office in St. Petersburg. It's actually the same price as my office in St. Petersburg, which is unbelievable because I was on like the 8th floor in St. Petersburg. I'm on the 17th floor here, and you can see it's a good view. We got a lot of Nashville in the background. But what I really want to focus on is what areas of Nashville and your city have the best long-term potential. So you can see we added this long-term growth score. It's a score from 0 to 100, which is telling you how the long-term growth prospects are for different areas. And the redder it is, the better the long-term growth over 10 years. The bluer it is, the worse the long-term growth is over 10 years. And actually last night, I was out to eat south of Nashville, and I talked to someone who is a real estate investor, and she was looking at buying a house actually in this zip code, 37218. And I showed her the data on Reventure app, and I showed her that we actually have a pretty low long-term growth score for this zip code. It's only a 32 out of 100. Take a look at this, everyone. 32 out of 100. And this area basically has poor wealth and income, low demographic growth, bad affordability, and is very overvalued. So based off that, we don't think the long-term prospects of this area are going to be very good because it's a lower income area. There isn't many people moving in, poor affordability, poor valuation, right? It's going to be a risky proposition to buy in this area. You're not going to get probably what you expect in terms of appreciation in the long run. However, she was also considering buying in another area south of Nashville called Nolensville. And we looked at the data for Nolensville. Nolensville is a 63 out of 100 on the long-term growth score. This is a much better place to buy for the long term, for the next 10 years. Why? Well, let's open up the card here. We have strong wealth, 97th percentile wealth and income, 88th percentile demographic growth to go along with 93 percentile previous long-term appreciation. Yes, the affordability and valuation isn't great, but when you have top level wealth and income, top level demographic growth in an area, that's going to insulate you from any market downturn. It's going to give you better odds of future success. And so if you're a home buyer and investor right now, guys, you need to access this data, especially if you're seriously looking at buying a house. You got to access that price forecast telling you where values are going to head over the next year. And you got to access this long-term growth score to let you know how good the prospects are in the long run for your area. The way you can do that is by going to www.reventure.app and signing up for our premium plan. So our premium plan, which you'll need to access this price forecast and long-term growth score, is $49 a month, which is less than 0.01% of the cost of buying a house. Ultimately, it's a great value. This $49 monthly pass can potentially save you $49,000 when you go and buy a house. It's an amazing ROI. Additionally, I would recommend, if you are going to be looking at the data for an extended period of time, let's just say more than 6 months, consider that annual pass because it comes at a 32% discount to the monthly pass. So if you are a serious home buyer, if you are a serious investor, do not make a home purchase without knowing this data. It's imperative that you know this data before making a purchase because you do not want to get into a bad deal. You do not want to overpay for a house, and you do not want to buy in an area that has poor long-term growth prospects. So go to www.reventure.app and sign up for this premium annual pass right now, and you're going to basically save money and make a lot of money in real estate as a result. Until next time, everyone, this is Nick from Reventure Consulting, signing off.